In our prior illustration, we looked at the Gartley pattern. We looked at the structure of the pattern. We looked at the reasoning of when to buy and sell. In an uptrending market, you want to buy bullish patterns, and in a downtrending market, you want to short bearish patterns. This keeps the integrity of the trend in place and also adds higher odds of success to the harmonic pattern. Now we are going to look at the bat pattern now, which is a derivative of the Gartley pattern. In the Gartley pattern, we looked at the X to A down to B, and that retracement was a 618. The same structure of the 382 to 886 from the BC, and then down we had that 786 retracement. In the bat pattern, it's an 886. So let's take a look at this one more time. And also we have the B to D leg, that 1618 to 2618. And we'll put the illustration back up and we'll look at an actual live example. So we had discussed in our prior example and what we meant by bullish patterns and a bullish trend. We'll look at this one more time. We're just going to draw it out so that we all can understand this one more time. Markets tend to work in waves to the upside or downside. Let me just fix this pattern. They work in waves. And typically after the market has rushed up in multiple waves or has trended up in multiple waves, you tend to get that corrective wave down before the market will continue higher. And looking at the bat pattern as an example, there's no difference between this and the Gartley in terms of where you want to place your trade. For example, this right here would be representative of a corrective wave in an uptrend, but with the bullish structure, a bullish harmonic structure. If we look at this, we notice that in this illustration, this pullback was 38% to 50% from the A and from the X, A, B, and then C, D. The D point had a deeper retracement than we did in the prior Gartley pattern, and this is where your D comes in. And this is an 8, 8, 6 retracement from the X low, A high, and D. As you can see, they have the perfect structure, and sometimes in a bullish trend, the market does need to retrace deeper. And in this case, with this particular structure, this is a bullish pattern or a bullish bat pattern in a bullish market. The reverse is true for a bearish pattern. In the example on the chart attached, we removed the prices, the name of the symbol, and the time. We just want to look at the structure and focus only on that. So we take our Fibonacci retracement tool and we take it from the low to the high of the swing. And what we see immediately is a couple of things. The market made its wave to the upside, and the first retracement down, we use a NinjaTrader here. On the first retracement down, it went 38 to 50%. This is what is required for the bat pattern. We could see on the way back up, the market put in between a 30, 38, and 88% retracement, and then we had its final wave to the downside. This right here is the basic structure for a bat pattern. This is where you would look to buy the market, and also your risk would go directly under the swing low. So we would label this X, A, B, C, D. Now what we can do is take away the arrows and make it a little bit prettier. Okay. So you would take your low to high and your first retracement of the 38 to 50%. Then you take your rally, and then you would look at the market right at the zone where you would look to buy the market. This is considered a bat pattern. In terms of targets, what I like to do when we look at targets is we look at the 38, 62, and 100% of the CD swing. In this case, we have the 38. We'll make that increase that. We'll show the 62%. And we have the 100% target. And this is what we will use for our targets for this particular pattern. So assuming that the trade was purchased or bought, your first target would be 38%, the second target is 62%, and the third target is 100%. Typically when you initiate a trade, the stop goes below the X point, just below the X point, and when the first target is reached, typically stops would go right at the D point, right below. And as prices move higher, you can trail a stop and work your exits. And this is considered the bat pattern.